Hello again, folks. It is still Thursday, September 14th. It is about 8 o'clock in the evening on the East Coast of the United States. In this video, we'll be looking at the charts of gold, silver, the mining stocks, and the US dollar. Let me start with a couple of thoughts that I didn't cover in the first video, this morning or this afternoon's video. First of all, and this is continuing with the idea that we have a challenge as Westerners in accepting or understanding that the world is changing. The world that we live in is changing. And that is that our Western media is controlled. You know, at one point it was 5 corporations. I don't know if it's still 5, is it 3, whatever. But the point is that all of the Western media, mainstream media, is controlled and only supports the narrative. They either misreport, intentionally misdirect us, give us bad information, or they simply memory hole items that don't support the narrative. They just don't report on it. And so anyway, if all you're doing is following the mainstream media, well, first of all, you wouldn't be hearing me because I'm certainly not mainstream. But for a person who is only following Western media, mainstream media, they don't. Not only do they not understand that the world is changing, they might even get argumentative with you if you tried to point out to them that the world is changing and how it is changing, because all they know is what the Western media is telling them, and of course it's all hooey. And then inflation. You know, we got a new CPI report this week. Here it is. You know, up 0.6% in August, up 0.2 in July. Anyway, inflation is continuing to increase, move higher, or is moving higher again. Gasoline, largest contributor. Of course, you know, oil prices are up, and we're in the summer, you know, it's summer driving season. And so anyway, not surprising, I guess, for those factors that inflation is increasing again. But in my opinion, inflation has nowhere to go but up at this point. So higher for longer, that would be my theme or my expectation for inflation, just because, you know, it's the de-dollarization trend. It's the move towards a multipolar system, multiple factors suggesting that inflation will remain high for a long time to come, years to come. And same thing with interest rates, higher for longer. Again, that would be my theme here. And for the same reasons, or some of the same reasons, we've got the de-dollarization trend and the move to the multipolar world. And of course, you know, the movement towards, well, both of those, de-dollarization, multipolar world, are reducing demand for the US dollar, which also reduces demand for US debt instruments, the US treasuries. And to fight those trends, the Fed, the US Fed, our central bank, has to continue raising interest rates in an attempt to attract buyers for their debt instruments, because they have to, you know, to maintain the facade that we have legitimate foreign buyers who actually want to buy our debt instruments. They have to keep raising interest rates to try to attract those legitimate buyers, because, you know, when it becomes obvious to the world that in reality all that's happening is that the United States is printing up US dollars to buy their own debt instruments, well, that's Banana Republic, and it accelerates or exacerbates the trend, you know, that the rest of the world will move even faster away from the US dollar and US debt instruments, because they see that the United States is acting like a banana republic. And so anyway, multiple trends in place at this point that, in my opinion, have put us in, and again, this isn't a future thing. This is already in place, already happening. We're in a downward spiral in regards to inflation and interest rates. And so it surprises me. You know, some of the articles reacting to the CPI report this week, that they're expressing surprise at inflation, you know, rearing its ugly head again. And you know, it's no surprise to me because that's my expectation. Higher inflation for a long time to come, higher interest rates for a long time to come. And something that is important to remember is that priority number one for the banking system, whether you're talking about the U.S. Federal Reserve or any of the other central banks, their first priority is to protect the banking system. It's not to protect the economy, make it easy for consumers to buy cars and houses, etc. Their number one priority is protecting their own interests, which means protecting the banking system. And again, they do that by increasing interest rates, not lowering them. And so anyway, higher for longer on interest rates and inflation. Yeah, and I already said that the de-dollarization, the move to the multipolar world, basically ensures that those trends will remain in place for a long time to come, in my opinion. So here we've got a chart of oil. This is light crude in the monthly time frame. We can see these, you know, we got a pretty strong pullback. And of course, this corresponds to the Biden administration draining the SPR. I think the Strategic Petroleum Reserve, I think it's at the lowest point it's been since the 1980s. That's just off the top of my memory. I haven't looked at that in detail recently. And now we can see in the last, 4 months ago it bottomed. And now we've had steady increases, and of course, increasing again this month. Just recently, we've had Saudi Arabia and Russia agree to extend their reduced output of oil. In other words, they intend to support higher oil prices going forward. So expect to see higher oil prices. And we can see in this chart, based on MACD, oil is in bull mode, meaning that both indicator lines are above the zero level. And we can see that based on the histogram and the indicator that momentum is headed back to the upside. Looks like we may get another crossover buy signal, MACD buy signal, here in the next month or so. And then, of course, the energy level based on stochastics is rising sharply. So higher prices for oil ahead. That's the Consumer Price Index report. We've seen that. This is John Williams' site, Shadow Stats, where he tracks inflation level based on the same methodology that the BLS used back in 1980 before they introduced all their methodologies that basically massage inflation to make it look lower than it actually is. And so in blue here, we have the 1980 inflation rate, and just eyeballing that, I'd call it 12%. And this is what in red, this is what the BLS wants us to believe, that inflation is only, 4%. And of course, anybody, if you shop, and I can't imagine that there's nobody listening to me that doesn't shop for something, whether it's putting gas in your car or groceries at the grocery store, whatever it is that you're shopping for. I think if you'll look back for the last year or so, you've experienced more than 4% inflation in the cost of just about anything you want to talk about. So anyway, 12% inflation based on 1980 metrics. This was, I saw an article on Zero Hedge today where they're talking about gold and yen breaking out to new highs. And of course, we can see in this chart, gold and yen has been had a series of new all-time highs going back all the way to March of this year. Basically, it did a sideways consolidation in late 22 and early 23, and then broke out to the upside. And of course, Japan is still playing games, as all the Western economies are. They're trying to, they're printing fiat currency, suppressing interest rates, etc. And so Japan doesn't directly control the price of gold the way that the United States does. And of course, all commodities are priced in the US dollar, at least for Westerners. And as I mentioned in the first video today, it's through the LBMA and COMEX that the price of gold in US dollars is controlled. If we looked at gold priced in any number of other currencies, we'd see the same thing, that gold has broken out to new all-time highs in those currencies. And I expect to see the same behavior in gold priced in the US dollar. As the West continues to fade in dominance of the world's financial system, we will see gold in the US dollar break out and move to new all-time highs. Now, I can't give you timing for that, but that's my expectation. Let's move on to the charts. So this is gold on the COMEX daily time frame, and I think gold COMEX prices. And so we can see, basically finding support on the 200-day moving average. Looks like we're getting a little bit of a bounce at that level. Multiple layers of support below that level if gold wants to go higher. Based on MACD, we're in bear mode and on a sell signal, and then energy is low. So, nothing exciting happening in the daily time frame for gold. Let's see, we're still, daily time frame. This is spot gold. Oh, and I wanted to point out, so this is the December gold futures. So COMEX futures, their price, this is December, I believe, is the forward month. And we've got basically 1930 is the price on gold, and then spot is at 1906. And we can see here that gold has actually dropped below the 200-day moving average, appears to be headed down to find support. This is the lower median line extension of this modified shift pitchfork. And apparently we're finding support at that level. Negative MACD, we're right at the zero level. So, but technically in bear mode, energy is low. In the monthly time frame, this pattern hasn't changed. I saw an analyst this week referring to this as a potential triple top. That's not my expectation. I think that gold will break out and move to new all-time highs, certainly before the end of 2024, possibly sooner than that. But it won't be for any positive reasons. It will be increase in global tensions, conflict at a global level, outright conflict between countries, or continued economic deterioration. So I am expecting higher gold prices, but it's not good. It's not a good thing. MACD is in bull mode. Looks like we might be moving towards a sell signal. Energy is elevated here in the monthly time frame. Weekly, you can see that we were flirting with new all-time highs and then currently pulling back from that level. Now, the positive thing in this chart, back in or I guess that's late fall of 2022, we got this series of bottoming candles and then moved higher. and we are basically stair-stepping higher. This is the technical definition of an uptrend. We get a low, a high, a higher low, a higher high, and potentially if we get a low in here and then break higher, that will be our next higher low. So currently we would say that gold in this time frame is in a technical uptrend. MACD is in bull mode, albeit on a sell signal. Energy is low. Let's take a look at silver. This is COMEX futures. So again, I believe this is the December contract below the 200-day moving average. We got a bounce off this is the lower median line of this modified shift pitchfork. Appear to have found support there and bounced. This is today's candle. The overnight session has opened lower than yesterday's close, or actually that was the daytime session. We'll see what it does throughout the evening. MACD in bear mode. Energy is low. Monthly time frame, sideways consolidation, nothing exciting here. MACD in bull mode on a buy signal, energy is elevated. Weekly time frame, just sideways consolidation. I've seen analysts pointing out that even in light of strength in the U.S. dollar and increasing interest rates, high interest rates, the precious metals are actually holding up quite well. And so that's a positive aspect of the precious metals right now, is that they aren't pulling back or dropping lower than they are. And here again, we can see technical uptrend, mid to late 2022, bottoming, and then, higher low, higher high, higher low in here, assuming that we break and move to a new high. So let's keep rolling. These are the mining stocks. Monthly time frame, GDXJ, that's my proxy for the mining stocks. And we can see that this uptrend was broken, but not broken decisively. It's basically the stocks stopped moving up and went into a sideways consolidation, and that's where they're at right now, basically in a sideways consolidation. MACD in bear mode, currently on a buy signal, energy just above mid-range. Weekly time frame, bouncing along here below both the 40 week and the 10-week moving average, finding resistance at those levels, bumping into resistance at the 10-week moving average. MACD in bear mode, energy is low. Daily time frame, support on, this is the lower median line extension of this modified shift pitchfork. We appear to be finding support along that level. Multiple layers of overhead resistance with the 20-day, 50-day, and 200-day moving averages. Notice that those moving averages are in bearish alignment. 20s below the 50 and the 50s below the 200. That's bearish alignment. MACD in bear mode on, we just got a new buy signal, but in bear mode. Energy is low, but upticking there slightly. So a little bit of a positive indication in the mining stocks. And of course, they've been in a downtrend for numerous months now. Reasonable to expect some upward action. They do whatever they want to do, but not unreasonable to expect some kind of rally, counter trend rally. U.S. dollar, this is daily time frame, and we can see that the dollar has been strong. And just a reminder, my expectation is that it would not be surprising to see uncharacteristic strength in the U.S. dollar as global economic conditions continue to deteriorate for the Western world, that because everything is priced in the US dollar, as contracts have to be covered, margin calls have to be met, there is a demand for US dollars. So even though things are deteriorating, people still need the US dollar, and I suspect that that's part of why we're seeing the strength. Sideways consolidation currently bumping into resistance, but obviously in an uptrend. Based on MACD, the dollar is very overbought, and we can see that, you know, this is the overbought level. And of course, you know, MACD is not a bounded indicator. It can move to infinity in either direction if it chooses to, but quite often we see these prior highs and lows in MACD acting as range boundaries. And so anyway, we're up at the overbought level for the US dollar. And so it wouldn't be surprising to see at least a minor pullback in the US dollar. Of course, energy is very elevated. So bullish chart if you're betting on continued strengthening in the dollar. This is the dollar in the monthly time frame. Big bullish bar so far this month. MACD in bull mode. Momentum apparently turning upwards based on both histogram and the blue line of the indicator. Energy is low, but taking a tick upturn to raising higher, heading higher. So yeah, strong in the monthly time frame. Weekly time frame for the dollar, you know, again, dealing with resistance in this resistance zone. You know, notice their resistance, support, support, resistance, resistance, resistance. So it's a well-defined support and resistance zone in there. So not surprising that the dollar's having to struggle a little bit in there. Maybe we get a little bit of a pullback, and, you know, maybe it just pushes on through that level. MACD half and half. So half bull, half bear. Obviously on a buy signal, energy is elevated. So again, bullish chart. Looks like we're about to get a crossover, the 10-week about to move above the 40-week moving average, which would be a buy signal. Let's go back to the daily chart. And similarly, looks like we're headed towards the golden crossover, the 50-day moving above the 200-day moving average. So that's it for the charts. And again, you know, the charts really haven't been that exciting lately, and that's why I haven't been sharing them in videos. I'm really more focused on the big picture because that's where the interesting stuff is happening, or at least interesting to me. So anyway, that's all I got for us tonight, folks. I will talk to you soon.